Hey guys, good morning. For some of you guys, it'd be afternoon or evening whenever you view this video, but nevertheless, happy day to you guys. It's Tuesday, July 7th, 2020. We had a successful trade session last night and early this morning. Targets were hit on the US dollar, Canadian dollar. It was a really pretty good trade setup. Um, I'm on an hourly chart. I did go down to the 15-minute to find my entry, but we did base our trade off of uh, this move down here. Um, it sort of gave us somewhat of a double bottom in this area right here. Um, Price did come back into a key level of structure down here at the bottom, so we did look for long positions. Once we found out that it looked like this area is going to be a key area of support, we then started going to the lower time frame. So let me explain that to you guys. So a lot of times we like to do our analysis. We start out on the daily. We don't keep going back to the daily because a lot is not going to change on the daily once you do your first analysis. I mean, you could do a daily analysis like a week ago, sometimes even 2 weeks. Um, because you get the overall sense of where the market is going. So you may just glance at the daily, but for the most part, you don't have to do all your heavy analysis on there. Now, we may then drop down to the 4 hour and the 1 hour and do all our particular major analysis. Um, if I feel like there's a lot going on the 1 hour chart, then I will begin to go to a lower time frame. Now, as far as for entries, if it's not a clear, like for instance, look at this candle right here. I mean, this is a pretty good, decent size candle for a bearish candle. And for this bearish candle right here, I don't have time to take a yes, this trade went right. We went long, but according to the bar elimination method, we want to eliminate the opposite color bar. So we want this green bar to eliminate this red bar. The problem is, look how many pips we're sacrificing to wait for this play right here. So 18 pips. So we're basically giving up 18 pips to wait for this thing to eliminate this red bar. Well, that's not ideal. So what is ideal is to say, hey, I have the direction. So instead, let us go down to the 15-minute, all right? And then under the 15-minute, look at this. Now we got more favorable entry, all right? So this is what we're looking like now, all right? We look at this. We got a red bar, green, and then as soon as it crosses here, let me draw you a line. So we would have been looking for this move, okay? As soon as price cross this threshold, because it took out this red candle, it eliminated, we went long, all right? We'll put our stop loss below the candle that was eliminated. So the stop loss will go just a few pips below it. So stop loss is somewhere in this area, all right? Now, I gave it more room. Normally you put your stop loss here, but I just went on ahead and just put it below that structure. I was willing to take that risk to put it that low, just in case something went to spike down. But yeah, sometimes you can look left and you can go a little lower. You don't have to be this tight. Normally, when you're this tight, you're probably somewhere up here in a range, and you want to be careful because you don't want to get a wick down action like this and knock you out with the trade. All right, so it was hit. All right, what was our target? Target was we want to go up to the highest point of this particular market structure, uh, this area right here. All right. So this is where we took the trade to. And my son, my 8-year-old, actually, I helped. We went over this trade over the whiteboard. So I was teaching him entries and exits and how to look left. So clearly you saw left, it has some nice structure. Remember, structure is where price is hung out and have touched a key area, multiple times. So got one, two, got 3 candles in this area. Yes, this could be considered structure, but this is consolidation. Really, this is not. This isn't really anything. All right. Yeah, you can trade in consolidation if you decide to. You can use the bar elimination method if you decide to. All right. But some traders don't like to trade in consolidated states. They want to go for the breakout. Now, this is a beautiful trade. All right. We got up here, then we got a nice little rejection, then we got another correction, and then we went up to the upside. All right. Targets were hit. Okay. Now here's the beauty. Look at this pullback. Where did the pullback occur? Like, where did it come? Okay. It happened into structure. So look at this. Let's move this over. This pullback came back into structure. So this is a retest. Look left. There are all these candles. Okay, look at this. All right. But look, more importantly, look at this right here. Boom. Right there. See this resistance point? Price pushed down. We get up, and then price came back and retested this area. All right. It retested it right here too. We broke to the upside and it came back and it retested. All right. And when it retested here, we went here to complete. Then we got pushed back down, and we retested this area again. So this is a key level that served as market structure for price to come back into this box. So that's why I tell you guys, don't ever chase. All right. Like, look at this. You see this breaking out? Some people start entering up in this area. Look at it chasing. They think they're missing out. And then what the price do? It came right back down into what? Structure. Look left. Look at all these candles. All right. So then what do? We can move our box. It says, look at that. In the structure. Okay. This is buying opportunities. So why? Because a trend is going to give you high, higher low, higher high, higher low, higher high, higher low. Okay? Trend up. That's how it's going to look. So this is a classic trend going into the right direction of your higher highs and your higher lows. And then if it's the reverse, it'll be a lower high, a low, lower high, lower low, lower high, lower low. You keep saying that real fast, you have a tongue twist. But so yeah, so you clearly see. Now let's look at this candle right here. Somebody could potentially scalp this. They may want to go down to maybe the 5-minute, but they could. This is a classic rule. Once it crossed this red candle, just to eliminate is green, but this is real tight. Your target would just be back here to structure. If it's tight like this, most people go real heavy with a lot size. So this is about, this maybe give you about a good 7 pips possibly. Stop loss will go right above here where the green candle was if you were shorting this down to the structure. And like I said, you put your stop loss real tight. It's because the market can do whatever it wants to do. It's not a guarantee. All right. Even the trade we took last night, we did it based off of our trade plan and using this particular strategy, and we stuck to it. Price could have came in, knocked us out. If it knocked you out, so be it. It is what it is. All right. This candle, see, it's getting stronger. We may come and hit this. So whoever's taking this trade. So you just clearly see that I just randomly just looked and saw opportunity that possibly someone could have went short. All right. And when you take these trades, you take it with fidelity. You take it with, hey, I'm owning it. It is what it is. Like, I'm sticking to my guns. I'm sticking to my plan. Your plan won't always work. Every football team that runs a play, they're not going to always score on every play. All right, they're not going to be perfect. Sometimes a defense has the perfect defense. I mean, the defense has a perfect play drawn up to defend the offense, or vice versa. All right. Let's look at UJ. Okay. Look at this. Okay, we're on an hourly chart. And look what we had. Okay, we had a elimination. We had this red bar, this green bar eliminated. What do? We look what? We look left for our target. All right. And guys, I'm showing you the simplicity of these things. And sometimes people make trading too difficult. All right. And what happens is you either went too heavy because you thought that, oh, this is going to be guaranteed this money. And your lot size got you in trouble. So when the trade didn't work, it just destroyed your account. That's why a lot of people like to jump around from strategy to strategy, is because they may go through a losing streak and like, oh, this don't work, this don't work. Yes, it do work. It's just that you just went through a bad spell of a losing streak. That happens. The best traders in the world, they may go through 5, 6 trades in a row that they're losing. All right, that's okay. Just take time off and reflect. All right, but this is a great one. Elimination, target hit. Bam. So one right here, red bar, green bar, target hit. All right. So you see all these. Okay. Same thing here. Green bar, red bar, eliminated the what? The green bar, stop loss above the green, push it down. We're going to take it here. Although price did come here, but we're being conservative and we're being realistic. This is the immediate area that we want to trade to. Price came to this area, locked in profits. We're good to go. If you want to be a more aggressive, you could have come down to this area. That would have been the second level. And then you look way over here, price did come down this area, but this probably wouldn't have been a target. All right. So you see multiple opportunities there as well too. All right. So we got a nice little V shape happening here. All right. What we could do, we can look for a possible pullback down to this area right here. Why? This could be shaping up as a potential inverted head and shoulders. So we got the left shoulder, the head. So right here, left, head, and then we need to have a right shoulder form. This right shoulder could come down to any of this area. And if it does, we're going to look for buying opportunities to take this trade up to the upside. All right. But we have to be aware this okay, yeah. So we're on an hourly. So look at this. You look on this hourly time frame. A lot of times you'll start seeing like you look, this look like there's a lot going on. There's really nothing like a clear direction for price. So once again, when that happens, we want to go down. Let's go up. Sometimes you have to zoom out. All right. So now we're on a 4-minute. The 4-hour chart. Now it looks a little different on the 4-hour. We zoom out. We clearly can see that over here we have a nice little bearish move to impulsive bearish move to the downside back in June. So the JPY was very strong. All right, and now we're in a a correction. So let's see how much we've corrected. All right, so we're corrected 50%. One of the rules that we go by is that anytime price breaches one of the fib levels, we like to consider that as a potential clue that price wants to go higher or go to the next fib level. So this is at the 50%. Look right here, 50. And this is at the 61. We can expect price to possibly come up to this area up here. And then, of course, ultimately, we can expect price to possibly come and visit this area as well, too. But for right now, this will be the area that we're looking for price to come down. Come to. That's about a 90 pip target for where we at. But if this makes a inverted head and shoulders pattern, all right, and this could be considered somewhat of an inverted head and shoulders already. I mean, we may get one or two more candles to form right here, all right, and you take the head to the neck and put it on top. Look at that. Let's drag this across so you can see it. Boom. Target. All right. That's how you get the target on the head and shoulders. All right. Some people like to use the fibs. Same thing. It's fibs gauge, the same target. Some of you notice that I stopped right here at the fibs. There's another way you can do the fibs, guys. You can stop where price is currently at, or where you anticipate the price will stop at, or you can go ahead and drag it all the way back down to where price was already a landmark. Still give us our upside target to this area. But if you look left, it's just really structure right here. See, we got 2 4-hour candles here. All right. That's another reason why a lot of people like to go on a higher time frame as well too. When it comes to market structure, it's a little better because if you look right here, this is 2 4-hour candles, but that's really 8 candles. So that's a lot of candles in that area if you're on the lower time frame. And then you go down to the 15-minute, it's going to be even more. So a lot of times going to the higher time frame, it helps clean up your chart a little bit more. You know, you're still getting the same thing, but you're getting less candles. So the 4-hour, like I said, is one candle represents 4 hours. All right. But if you go down to the 1 hour, you're going to have 4 candles in that area. And if you go down to the 15-minute, you're just going to multiply that. All right. So you're going to have probably a total of 8 just representing one 4-hour candle. All right. So remember, some of the rules is that go down to the lower time frame to find your entry. If your 1 hour is it's not giving you a clear entry point, you clearly see, like for instance, on this yen, we clearly see we got a green candle forming. Instead of you waiting for this to eliminate this candle, and if it did eliminate this candle, see right here, all right, it'll take you 15 pips to eliminate that candle. But if you go down to the 15-minute chart, look for entry, you may find a better entry. All right. All right, so look where we're at now. So like I said, look, we was just on the green candle, even though it's like a little hammer, like it was forming. But you got a clear, you can see what's happening now. We're in a bearish candle, but on a 4-hour, excuse me, it still was a green candle with some with a wick. So we know when the wicks form on a green candle, that's some bearish pressure coming in, and vice versa. Just like you have this red candle right here with a wick action going to the upside, a little bit of what bullish, the bulls kicked in to prevent it from going down. All right. So looking on 15 minutes, there's nothing to be done right now until we get a clear cut. You know, we have this level right here that we need to figure out what's going to happen. All right. And the ones who are conservative, what they do is they look for retests. They look for maybe price to come break out of this. Price breaks out. And then once price breaks out, they want to come back and retest and take this down. Okay. So break. And then retest. And then down to the downside. Let me use my brush. That was not good. So guys, don't get frustrated when you're trading and it's not going according to plan. See that retest? It says retest right here. It's a retest. All right. We want retest for trend continuation. Retest is a safer way for you to trade, and some traders, they don't enter in until they get a retest. All right. So you see this move up here and you'll say, oh man, I missed it. When a conservative trader looks at this move right here and says, this is a key level, I'm going to wait till price comes back into that level, and then I would take the trade. And then you would say, that is crazy, like it's never going to come back. But the conservative trader says, I trade my rule. Boom. Put the line there, look left. Look right. Where's price now? Price is back into a key level of structure. Look at this. Price is back in this area. You said it was going to not come back, but it did. Came here, settled. This person can buy, possibly look for opportunities to go to the upside. All right. Where they're going to put their stop loss, if they're pure trading, they're going to put it below the structure right here. Okay. This is their stop loss below here. And they're looking to take the trade up. Okay. And we're on 15 minutes, so we might have to go over more to see where our targets would be. And this person will look to possibly trade it into the structure zone right here. Sorry about that. Right there. Boom. All right. So retest. Bam. All right. Then they may do some confluence. Confluence, we want to see where this price stuff falls to. All right, confluence falls a little bit below the or right into the 78% region. So we can expect this price to come up to the upside and get into the 78% region of the Fibonacci, and then we can maybe watch for either drop or correction, so to speak. All right. So today I just did 2 pairs, guys. Look to do more videos on maybe 1 to 2 pairs. Focus on that. Yes, I do trade stocks. I do trade, but what I'm doing is I'm getting out of the trading of stocks mainly. I'm gonna start back doing a little bit more options trading. And the only reason why I'm doing options trading is just to stay relevant, just to make sure I stay fresh on my game. I love Forex because of simplicity. I can just focus on 1 or 2 pairs I can make 70% of my money in a month just on 1 to 2 pairs. Sometimes just one. Of course, with cryptocurrencies, I don't trade them, but I do invest. I invest a lot um, in crypto. So I do technical analysis, but I usually like try to stick to the fundamentals when it comes to crypto. Make sure they got a right project. Make sure they got a great team. Make sure they really are solving real world problems. Um, for stocks, there I do have some holdings. Um, I liquidated a lot in 2018, so I have a few like cannabis stocks, marijuana stocks, um, like a diaper company or something like that. But they're performing poorly right now, so I'm just in the red with those and just holding. It is what it is. But I will look to start building back up a long term position and with investing with it, um, multiple stocks out there. Uh, things like, let me see, like electric car companies, trucks, etc., automobiles. That's the future. Um, space travel. All right, it seems weird. Space exploration seems far out there. Anytime something sounds crazy or far out there, you may want to look into it. This is not a financial advice or investment advice. I'm just telling you, just when something sounds crazy, you really need to look into it. All right. If you would have said something about some SpaceX and what you're trying to accomplish, I would have laughed. Right? That don't even make sense. But lo and behold, we here. You got the self-driving trucks. That sounds stupid. It sounds like it's risky. Sound like I want a human behind it, but at the same time, they're out there now. Self-driving trucks is happening. All right. So we got to look at these technologies that's disrupting multiple industries, sectors. We need to look at emerging economies, emerging technologies and sectors as well. Blockchain, cryptocurrency is a disruptor. That's why I have a lot of capital and time invested in those particular industries. All right. Gaming, keep that on your radar. Um, and in your game, you're gonna have your gambling. So like DraftKings, people like that. That's who you need to keep your eye on. All right. And then you got gaming cryptos like Engine Coin, huge. And I think you have Win, and I think there's someone's like Wink. It's a gambling token in the crypto market. But you got all types of things that are interesting to look into. I like biotechs, so look into the biotech industry as well. So biotechs is good, and especially people who want to be coming up with vaccines uh, for this pandemic, um, but also different biotechs are coming up with cutting edge cancer treatments as well. So keep your eye on biotechs. Um, the REITs, the real estate market, I will wait for when we have a strong correction or crash in the market for the real estate market. Those would be great. All right. Any of you doing oils, um, energy, gas, those could be considered great, but just make sure you have a great exit plan. I wouldn't be looking for me. I can't see myself holding 10, 15 years on a particular oil play. Here's the reason why. We know that we have a disruptor coming with the electric and energy, renewable energy sources. So we need to make sure that we're also investing in those particular projects as well in their infancy stage. That gives us time to have the potential growth that we're looking in that growth in the growth sector. All right. I do believe that oil and all that stuff will rebound. It will. But at the same time, you don't want to put everything into that and then leave out the emerging markets that are eventually going to probably replace oil and gas. All right. So thinking of it like this, and I'll leave it at this. If you had a vehicle and you remember back in the day, we had the cassette tape deck in the vehicle. All right. And then as they started making newer models in the late 90s and early 2000s, they started to add a dual. You can have a cassette tape and a CD player. Then eventually it went to just the CD player. Then all of a sudden they just started having an aux cord along with the CD player. And then the CD player is gone. Then they just had the aux, and then now the auxiliary cord. They still have it on some vehicles, but the auxiliary cord is now gone, and now they just got Bluetooth. All right. So it used to be Bluetooth and the aux, and now the aux is going now to have Bluetooth. So you see the evolution of things becoming obsolete. So when you think of gas, when you think of things, you may say that would never be like. Don't say that. Just like the main way that companies would transport goods and from one place to another was through the train. All right, the train. That's how they got it. Airplanes came. If you would have thought about an airplane, if I would have explained to you what an airplane was going to do if I would have went to you back in the 1700s, early 1800s, whatever, you would have been like, boy, that don't even make sense. Flying. Think about back then you had boats, trains. That was the means of transporting, getting either goods from one place to another or people. Things that don't even make sense. But look where we at. All right. A lot of us don't take trains. We don't send a packet by a train. All right. It's still here, but it's not integrated into our economy that we're using it more than at a rate that we used to. All right. So when you're doing your investing, doing your research, just look around you and say, what is something that I noticed that a lot of people don't? That's where you start to build your wealth. A lot of people don't do that. They want to do what everybody else is doing. No, like for instance, everybody's jumping on Amazon. I love Amazon. I shop at Amazon. It's a great company, but I would not put a dime in Amazon outside of maybe trading some options, put contracts, or maybe some calls. Other than that, I'm not putting you in my portfolio. Only reason why is because I want the pure, strong growth that if I can find a company that can become 25% of the price of what Amazon is currently at, which it was over 3,000 something dollars a share. So what that put us at if we did 3,000? So that's $750. You take JD stock or Alibaba, any of those. You take JD stock. I think it was around $62, so some change. JD stock is a Asian company that's like Amazon. It has the infrastructure just like Amazon. It has a lot of things going for them. Strong revenue growth. Seem like a great company. Well, if they're at $62 and I'm only looking for something to be 25% of Amazon, that's $750. So basically, I'm looking for JD to become a $750 a share company. But what I'm also looking at is JD to eventually do some stock splits because that's what Amazon has done too. You have to understand, whenever stocks grow in price, they can get to a unsustainable level. A lot of times they like to do stock splits so they can invite in new investors. All right. They want an attractive price. So what they would do is they may do a 1-to-4. For every one that you have, we'll give you additional 4, but we're going to have to lower this price so we can attract new investors. If they don't, it's going to be hard for new people to come into the market buying the Amazon at $3,000. All right. So I'll leave you with that. I enjoyed it. I'm gonna try to put out more videos. All right, but you guys, y'all have a great day. Make sure you subscribe. Make sure you like it, and let's keep it moving.